Hello traders, in this video we will just be looking at what we discussed on gold last week, what our bias was, why our bias was what it was, and how did the market play out the course of the week. All right, so we're going to play that out and then later show you what I think my opinion is on gold, but I'm not going to be taking any gold trade because of the very strong momentum to the upside, right? But I'm going to show you on the chart what I think will happen if gold is going to sell and we're going to continue to buy. Where do I think gold is going to buy from? So without wasting so much of our time, let's get straight to the chart. So this is my gold chart, right? You will recall that last week, the first thing we identified on our chart was a rejection block, right? Now, what is a rejection block? I'll be very quick about that. Let me change this to green because I like to denote my support with green and my resistance with red. So let me just keep being consistent with that, all right? So what we noticed last week was a rejection block. Let me just show you what I mean by rejection block. Right, if you look at this particular spike here and you look at this particular candle, so if you look at the one to your left and the one to your right, you will see that the middle one has the longest spike. So what I simply did was to mark the entire spike, right, of the middle candle touching the body. And as you can see, that was a very, very important institutional reference point. Guys, anytime you see this kind of pattern in the market, please always know that there will be a trading opportunity around it. So I noticed it. And the first thing I did after noticing this was to divide this into, if you check my last video, you will see that. And if you want to continue to get notification every time we share a new video here, please make sure you subscribe to the channel, turn on your notification button, and then share and like the video as well. That will always give you the opportunity to see or to get notification anytime we share a new video. I can assure you that this channel is a very, very educative channel, and you will always learn a lot that will always get you more profitable in the market. So that is guaranteed. I can always assure you. Right. So the next thing I did was to divide this other block into two, right? This whole green rectangular area into two equal parts. The reason why I'm doing that is if gold is going to spike down, it's probably going to spike down and probably reject the middle of it, right? And that actually helped me to know that I need to put my stop loss just below that area. And if you check my video, you will realize that my stop loss was actually below 1807. All right. So what then happened? I moved down to the lower time frame, which is the daily time frame, and it then became clearer. And what you would see is that there have been several attempts for price to come into that area, and the first time the daily chart or the daily candle actually got to that area, it was rejected. And this was actually the effect of the NFP. If you are subscribed to this channel, you can go and check the video I made on my NFP setup, and this will make a lot of sense to you as we go along. Now, looking at this particular chart right now we're on the daily, it then becomes so interesting for me, right, to see what price is doing. The first thing I saw at close of day of Friday was this change of character, and you saw price actually broke above. Even if you take it to the next one, you can still see that price actually broke above the last 3 days, right? That makes it interesting. If you also go to 4 hours, you will see that very, very clearly, that in 4 hours, there was a breakout, and then the next candle also rejected the breakout point, and that makes it quite interesting. So let's go back to the daily chart and see what we are looking at. So what did I then identify on the daily chart? I identified that price has been coming down for a very long time, and for like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Now, this is the only daily candle that actually closed bullish in the last 10 days, in the last 11 days precisely. So what that gives me, what that tells me precisely is that, we might want to start seeing some level of reversal, in the market price as far as gold is concerned. So the next thing to do is to look at where is gold likely to get to. So the first thing I can identify here is, a breaker block. What is a breaker block? A breaker block is simply a violated bullish. A breaker block is actually a violated order block. So it could be a bullish order block that has been validated. Now, a bullish order block that is validated is referred to as a bearish breaker block. Now, what am I saying? Let me just change the color here to purple so I can distinguish it from the previous one I showed you guys. Now, this purple zone here that I'm marking out, was actually supposed to be a point where price should respect. After this move up, we expect that price will, respect this zone and go up. But what happened? Price actually violated that zone, right? Price actually violated it rather than, and it violated it, came down here. So you would expect that price would come back here, respect it, and then continue to go down. But, guys, when you are trading, you really need to wait for price action. Imagine someone putting a pending order for a buy because he already knows that this is actually a bullish order block. That person did not wait to see whether that zone will actually hold price. So the tendency to lose money is very, very high. So this is why we always preach patience in trading, right? So now I can identify this. So now I already know that this move that started here is likely to take us to this point. And then the next thing I could also identify is an upper bearish breaker block, right? So this is the upper bearish breaker block. You can see this was the previous candle before the one below that was expected to have held price but did not hold price. All right, so this is another point of interest. So I will be expecting that if this area gets violated, right, if this area gets violated, then this will be the next. So what's the other thing that I'm seeing here? The other thing that I'm seeing here is that there is a bearish order block. So it will be expected that price will respect this also, right? Now, I'm much more interested in price getting to this point, right? And I'm going to be holding my, I said last week, remember that I'm going to be holding my trade until I see what happens here. So I actually held my trade to that point. So I'm going to be denoting this area with a red color just to show that I'm referring to. So last week I was hoping to see price get here. So I kept holding on my trade, taking partial profits, and waited till price got to this point. And immediately price got to this point as predicted, I actually exited my trade, and now I'm totally out of the market. I'm going to be showing you the result immediately after this play. So let's see what then happened. So don't forget, I actually entered my trade around here. I took a long position from I had 3 long positions. If you check my video, you will see that I had my stop loss just below 1 807 based on what I showed you guys from the previous chart on the weekly. And the next thing I did was to go to the 4 hours. I didn't go past the 4 hours to see where is the nearest, where is the nearest bearish order block. So I was going to see what price would do here. So I took partial profit around here, took partial profit here, took partial profit here, and then let's see how the market actually played it out. So I knew I was going to be out of the market around this area. So this was my trade in the course of the week. So let's see what actually happened, with the playback. So I'm going to play this very fast and let's see what actually happened. So as you can see, price actually respected a little the immediate bearish order block, and then as you can see, price actually violated that point. This was the trade that I took in the course of the week. And guys, if I go back to the weekly so that I can show you my results, you can actually see that I actually traded that particular, and I shared it on TradingView. For those of you who follow me on TradingView, you would notice that I shared this, and this was the result, and this was how it all played out in the course of the week up until Friday. So I am going to be taking this off and just quickly share my opinion with you based on what price is currently doing. Okay, let me just shift this a bit. So I'm going to come back to the current market. I'm going to clear my entire chart, and I'm going to be looking at what price is doing. Now, what have we seen? Now, don't forget, this is a new bullish order block that has been created by that move. Don't forget, price actually came, rejected this area, as you can see. And the first thing you would identify last week, was the fact that price has been coming down even on the weekly, as you can see, and has not been able to break the zone. But you see what the weekly candle did. The weekly candle actually is trying to show some kind of respect for the bearish order block that was created in the course of price coming down. So I'm expecting to see some reaction here. I already saw a close above. Now let me just change this color to green just for you guys to see that I'm actually talking about the bullish order block here, where I'm talking about the bearish order block here. So this is my point of interest. Price is currently at the weekly point of interest, and as you can see, the last week candle actually closed above the trend line that has been holding since precisely this trend line has been, let me adjust it a bit to the body, doesn't matter. It has been holding since March 2023. This is the first time we are seeing a bodily closure above that trend line. So that makes this candle significant. So I am actually hoping that price will respect this and come down. But if it doesn't, then we might be in for some significant move to the upside. But let's go to the daily time frame to see what is going on there. Now, looking at the daily time frame, you can see that obvious. So I can adjust, the trend line, right? I can adjust that trend line, right, on the daily, not to close, not to violate the body of the candles that I'm seeing on the daily. So this is an adjustment to the trend line, and you can see what I was just trying to do here is to ensure that my trend line does not cut through the body. That's what I was trying to do. I was trying to ensure that it doesn't cut through the body, just to make sure that it is value. Now, what can you see? Very significant and very obvious. Even the last daily candle that actually closed above the trend line, are now trading right inside, violating the daily bearish order block. That is another significant thing that we saw. Right now, guys, now what we are going to see now is that this trend line now becomes very important. Are we going to see a bounce of the trend line? Are we going to see price continue to come down, probably to this bullish order block that was created, or the one right below? So for me, if I'm going to buy gold at all, I'm going to wait to see what is going to happen. If I see a bounce and a violation of this weekly bearish order block, then I will come back, to somewhere around here. Use any institutional reference point to actually buy gold. But in the meantime, what I am seeing is the possibility of price taking out the previous high, that led to the downtrend, which was even this particular one that took place on the 5th of September. We saw price hit 1952 to 1953 area. So I'm going to be looking at price respecting this weekly point of interest. So my first attempt at gold, pardon me, let me just undo this. My first attempt at gold will be a sell rather than a buy. If I see some sign of retracement and my stop loss is just going to be slightly above the weekly bearish order block, right? But I'm still going to wait to see some bearish, pattern before taking the trade. And my stop loss is going to be around, my TP rather, is going to be around here. Now, if price does not get to that area, my first attempt would be for a buy, would be at the middle of this bearish order block. So this is what I'm going to be doing. I'm going to be marking the middle of this order block. I'm going to be ensuring that my first attempt at a buy is going to be at around 1873. So this is going to be my setup, right, for sell, and this is going to be my setup for a buy. If I'm going to take a buy trade, my buy trade is going to come from here, right, and my stop loss will just be slightly below the order block. If price comes into this lower order block, then it means that I am wrong. So to this extent, I'm not going to go to a lower time frame to show anything. I'm going to come back in the course of the week to see what actually transpired. But this is what I'm going to be patiently waiting for: either a sell from 1847 or a buy from 1873 area. But before I take any trade, I'll probably just go to lower time frame to see a much better entry. So on this note, guys, I would like to end this video. See you in the next video in the course of the week. Enjoy the week and have a blessed week.